Hello, welcome to LSBF TV for AAT students. Guys, you're tuning in to listen to me, Joel Romaner, guide you through what the examiner has said is a rather challenging task. In this session, we're going to be looking at assessment task 2 in indirect tax. Now, this is a task that doesn't really require a calculator. So it's into an area where you feel exposed because you cannot use a computation to get you out of trouble. There is a small computation, I must add, but really it's about thinking. Guys, we're looking at task number 2, VAT invoicing. Now, if you've seen me on AAT TV or LSBF TV for AAT students before, you'll know that I'm a massive fan of the reference material. And here in tax, you benefit from having, during your assessment, access to reference material. Now, if you're shrewd and if you're wise, you will calmly approach this task by utilizing the information that is available. Now, I would hope that you don't go into your assessment having never read this thing before. But the beauty is, once you've gained an understanding, once you have become aware with the rules of VAT invoicing, you don't need to panic and keep all of the information contained tightly in your mind. Oh no. You need to just rest assured and have a big, relaxed smile, because any discrepancy, you're just going to pick up this document during the course of the exam and you're going to look for what the information is you need. Now, I stress, the examiner says people often, and his words were, fail to read the question that is said or interpret it accurately. And there really is no excuse when we have it here. Now, in this session, we're looking at VAT invoices, which is on page 14. And the significance and the importance of this, and the reason why you've got to have looked at it in advance, is that there is so much information tightly congested here on page 14 under VAT invoices. Now, I'm not going to read this to you word for word, but this is the things that you must know. What I'm going to use is, as we work through an example, across the 4 pages, I'm going to find the piece of information that relates to ourselves and home in on that, as you should do if you're in the assessment and you need some prompting. So we have all of that information just here. Now, assessment task 2, let's take it from the top. It's broken down into 5 different pieces, 5 different requirements. Now, I'm going to go through each one carefully, and I'm going to give you a bit of the background, and then we will apply. So, the very first task, a business makes the following purchase: standard rated goods. Standard rated. Now, standard rated is the normal rate, so goods that are not exempt or not 0 rated. Standard rated goods, let's change that up, for £110 plus VAT of £22. And 0 rated goods, goods for which the tax is not charged, but it doesn't mean it's exempt, it means it's 0 rated, for £68. Now, the operative word in this question, the word that draws your attention to what the requirement is, remember the examiner says people aren't reading the question carefully, is which one of the following amounts must appear on the simplified VAT invoice issued to the business? Well, is it £22? So would we ever have an invoice just for the VAT? Doesn't sound quite right. Would we ever have an invoice for just our 0 rated goods? Or would we ever have an invoice for just the standard rated goods? Or would we have an invoice that consolidates all of those numbers? 110 plus 22 plus 68 does in fact give us 200. Well, you're in the exam, the assessment, and you have lost track of what is a simplified invoice, which is highly understandable because there's a huge amount of information that you need to retain, and the AAT is very much aware of that, which is why they provide you with this wonderful guidance document. So use it. And, oops, what has happened there? That's fine. So use it, and we're going to go to, it's page 16 here, and this is the simplified invoice, and we're going to read the rules and we're going to uncover our answer. So what is a simplified VAT invoice? Simply less detail. A VAT registered business can make taxable supplies of goods and services for £250 or less. Well, do we breach that rule? No, we don't. The total there was 200, including the VAT. Then it can issue a simplified VAT invoice that only needs to show the seller's name and address, the VAT registration number, the time of supply, a description of the goods or services, the total payable including the VAT. Okay, that's not helping us in our requirement, no. If the supply includes items at a different VAT rates, then for each different VAT rate, the simplified VAT invoice must show the VAT rate applicable. That doesn't impact our question. Exempt supplies must not be included on a simplified invoice. Well, we didn't have exempt supplies. We had 0 rated and standard rated. There is no requirement for the business making the supply to keep copies of any less detailed invoice it is issued. Guys, the piece of information that we need that's going to facilitate us getting the 3 marks that are on offer here has been overlooked vaguely by myself because I wasn't quite sure of all of the information, as you wouldn't be in the exam. But by relaxing, taking a measured approach, what you can see is the total payable including the VAT. The total payable, including the VAT, means that back here in this task, we need the total. Well, 110 plus 22 plus 68 is 200. And that did say including the VAT. So which one of the following amounts appears? It's going to be this one, 200. Guys, the answer's there for you. Just need to take your time, don't rush. Keep calm, focus on the information. Now, we remain on the concept of the simplified invoice. May the business issue a simplified invoice for this sale? Which sale? The sale above. A business makes the following mixed supply. So a mixed supply, standard rated goods of 185. Plus VAT of 37 and exempt food of 28. Well, 185 plus the 37 plus the 28, that's 50, 65, that's 250. I vaguely recall something about 250 in the reading that I just did. So let me go back and change this. Or references. A VAT registered business can make taxable supplies of goods or services for £250 or less. Okay, well, with that piece of information, it's suggesting to us that they can. And you would be induced to pick up your pen and come straight in with a yes, but you'd be wrong. Why? It's less than 250, including all of the total. Why can't this business issue a simplified invoice? Let me explain. It's because this word here has gone unnoticed, perhaps, and that is the word exempt. Exempt. What? What is exempt? Well, food is exempt. It's not 0, it's exempt. No VAT is charged upon food. Subsequently, in our reference document, if you were paying attention to this, it says exempt supplies must not be included on a simplified VAT invoice. Exempt supplies must not be included on a simplified VAT invoice. So you've not been, well, you have been, forgive me. We have a slight issue that let me just change that. Okay. Okay, I think I'm back. Yes, it looks like I'm back. I think there is an issue there with some technical problems in the background, but nonetheless, let's persevere, shall we? So don't be alarmed, don't be confused, don't be misled by any of this. Take your time, and here we have it. No. Why? Because we are not allowed to issue a simplified invoice where we have exempt items. Okay, so we're 4 marks in. No need for a calculator, unless of course you wanted to for that first part. Now, we get to part C, and part C is one of these questions which subsequently causes me a little bit of panic inducing because it uses words that I don't feel comfortable. It's using Latin, de minimis amount, and subsequently I'm starting to panic. But there is no need. Remember to keep your calm. Remember to focus on what the rules are. A business incurs input tax. Now, to take you back to what you should by now hopefully know, input tax is the tax that you've paid upon supplies that you're going to use in the course of your business, which will subsequently be sold where you charge output VAT. So the input tax in relation to its exempt, its zero rated, and its standard rated supplies. The input tax that it incurs in relation to its exempt supplies is more than the de minimis amount. More. And did you notice they have a variety? They have exempt, they have zero rated, and they have standard rated supplies. So what you've got to be clarifying here and what you need to be able to answer. Complete the following sentence regarding the business's input tax for this period. The business can reclaim either some of its input tax, none of its input tax, all of its input tax, because it makes exempt supplies that are more than the de minimis amount. Well, the de minimis amount is more, so that looks like a possibility. Because it makes some standard rate supplies, well, yes, they did, so that could be a possibility. So clearly, this is confusing because there is 3 different options, 2 different options. There is about 6 different variations of an answer you can give here. Well, again, like I have said, the examiner finds people's answers are not to the desired standard, and largely because you're not calming yourselves down and looking at the information. And the information we're going to need here, we're going to find on page 10. Now, page 10 in this document is on exempt and partly exempt businesses. Take you back to the top. We're looking at exempt and partly exempt businesses. And if we go to that page, to page 10, what can we find? Well, we can find, sorry, give me a second, page 10. We can find this page, and let's help you tooth comb it for the information that would give us the correct answer. So there are some goods and services on which VAT, yep, we know that. Exempt supplies are not taxable, yep, we know that. They're not included. Okay, if a registered business buys exempt items, there is no VAT to claim. Of course, because they weren't charged in the first place. This is different to zero rated supplies. Okay, not really of much excitement so far. Businesses, though, we're told just here, that which only sell or supply exempt goods and services, well, there really would be no VAT for them to be claiming. It's really here where we want to focus. It's a partly exempt business. In our example, in our question C, it is partly exempt because we're told that they do have a mixture of partly exempt and zero rated and standard rated items. A business that is registered for VAT but makes some exempt supplies is referred to as a partly or partially exempt. Generally, such businesses won't be able to reclaim the input tax paid on purchases that relate to exempt supplies. Okay, but they will be able to claim on the standard rated supplies. However, if the amount of input tax incurred relating to exempt supplies is below a de minimis amount, the input tax can be reclaimed in full. We need to be very careful here, because that could lead you to the wrong answer. If the amount of input tax incurred relating to an exempt supplies is below, input tax can be reclaimed in full. And guys, look, the question, so careful you need to be here. Right, I have problems with my screen. No problems now, it's come back, thank you. So, we were told that the input tax it relates in relation to its exempt supplies is more. Now, what that does, it says, it's not all. It can't be all, because it was only all if it was below. So it cannot be that one. So we're on some or we're on none. Let's go back to the important page, shall we? If the amount of input tax incurred relating to exempt supplies is above the de minimis amount, above, that's what we've been told, we're coming to our answer. Only the part of the input tax that relates to the non-exempt supplies can be reclaimed. Only the part of the input tax related to the non-exempt supplies can be reclaimed. Well, that means we can reclaim some, but not all. Guys, back here, it said some, but not all. So we are approaching an answer. The business can reclaim some of its input tax, that they've paid on their standard rated, that they have paid perhaps on their zero rated, because the exempt supplies are more than the de minimis amount. Do you see what I did there? I took my time and I read the requirement carefully, the reference material carefully. There is no way the AAT expects you to know all of this, but what they expect you to do is what you would do in the workplace. You would refer to a manual or a guidance and you would find your answer. So you're showing competence in the ability to read the rule book. Okay, let's move on, shall we? We've got another task coming up right here. And this is all about tax points. So tax points, there is a huge amount of tax point information. Perhaps, again, you need to have read this and know this before you go into the exam, and in the exam, in the assessment, you use it as guidance. Tax points, we're told, is on page 12. Tax point. So here we go. Let's go up to page 12. The tax point. The time of the supply is known as the tax point, the date when a transaction takes place for VAT purposes. This date is not necessarily the date that the supply physically takes place. Okay, so what we know is it could be, but it's not necessarily when we physically deliver them to our customer. Generally, a registered business must pay or reclaim the VAT. This is information that is not directly going to help us. The tax point here, this looks good, for goods and services. Okay, no VAT is issued. Our requirement, let me just double check what it's saying to us. A business delivers goods to its customer on the 11th of February and issues a VAT invoice. Okay, so they do issue a VAT invoice. There are exceptions to our rule. Date when the supply takes place. Now, I guys feel that this is slightly congested, but down here there is this 14-day rule, and let me summarize for this for you, if I may. So the tax point will be the earlier of the delivery or invoice. Okay, it's the earlier of the delivery or the invoice, and actually there's a third, the payment, but it's rare, but there are times when payment could occur before invoice. But let's, as we've got here the words they deliver, so we've got a delivery in this requirement and we've got invoice. Well, the tax point will be the earlier of delivery or invoice. Delivery took place on the 11th of February, and they issued a VAT on the 27th of February. Now, according to the rule that I've just written up for you, you would be forgiven for immediately saying the answer has to be the 11th of February. However, what I was drawing to your attention a moment ago was the 14-day rule. And if you issue your invoice within 14 days, then your tax point will be at this position. So I need you to understand there is a caveat to this. The tax point will be the earlier of delivery or invoice. The exception is where the invoice was issued within 14 days. The exception is where the invoice was issued within 14 days of delivery. Well, then the invoice date will equal the tax point. However, 14 is the magic number. There is 16 days. So in this situation, had the company issued the invoice, let's say, on the 20th of February, 9 days after delivery, then the tax point would have been the 20th of February. Had they issued the invoice on the 24th of February, some 13 days after delivery, the tax point would have been the 24th. But because it took them 16 days, they have exceeded the 14-day rule. And therefore, the delivery date must be used. So, up into our question. What is the tax point for supply? Guys, it is the 11th of February. It is the earlier, but it's because they exceeded the 14-day rule. Not so straightforward, that one, because there was too much information to digest. Now, on that, a business dispatches goods to its customer on the 15th of July. What is the latest date that they can issue a VAT invoice? Well, on page, I think it's 15 of our document, we have the rule there that exists around the deadlines. And the time limits issuing VAT invoices is given just here. There is a strict time limit on issuing VAT invoices. Normally, it has to be within 30 days of the basic tax point. The 30 days. So we are looking at a period now of 30 days after, and you have to be very careful here, the 15th of July. There is exception to this rule, but we're not worried about that. We are just asked, a business dispatches goods to its customer on the 15th of July. What is the latest date? So it will be 30 days from the 15th. Well, we've got the 16th, 17th, 18th, 19th, 20th. I'm going to do this in blocks of 5. We've got the 21st, 22nd, 23rd, 24th, 25th. Okay, you'll see my technique here. I've got the 30th. Now, July. If you don't know this, January, February, March, April, May, June, July has 31 days. There are 31 days in July. That means there would have been the 31st and then the 1st of August, 2nd, 3rd, a magical day, and the 4th. Now I'm in August, I'm just going to add 5 to take me to the 9th. That is 5, 10, 15, 20, 25 days thereafter. So day 30 after this, we're looking at 10, 11, 12, 13. Now, in truth, I should have perhaps not misled you. You had to have included the 15th on this as well. So that will be our date, because 15 is day 1 and 29 days later will be day 30. So the 13th of August. Do we have a year? No, we don't. Okay, there we have the end of task 2. Perhaps a challenging task for you guys. You are historically more likely to enjoy calculating the rates of input and output VAT. When it comes to the administration and the rules and regulations that exist around the VAT invoice, it's perhaps an area that you are not brilliant at. But hopefully, as I've demonstrated to you over the course of the last 25 minutes, you don't need to be. Just have an awareness of the rules, the reference materials provided to you, and utilize it to your advantage when you are sitting that assessment. And then I guarantee you will get full marks. Guys, this has been LSBF TV. I've been Joel Romana. You've been fantastic. Have a wonderful weekend. Goodbye.